In today's video, we will be talking about the problem child Ethereum and whether or not we will see one more high in this bull market. We will look at the structure, what we will do with our trades, where we are buying, what prices we are looking at for prices to turn around. We will be looking at some in-depth data as well as a liquidation heat map and also structurally Elliott wave as always. So make sure you watch this video to the end to see our own actions and trades and what we think is going to happen next. But let us start into this video first of all with the structure. I will zoom out a bit so we can see the bigger picture. What we're currently viewing is what has happened since the 6th of December, so basically start of December. We think, I will draw this on the chart here, that we've seen a wave A to the downside, a wave B to the upside, and are now in a wave C to the downside in a larger wave 4 correction. That is how wave 4s are formed in Elliott waves, an A, a B, and a C wave. So everything normal, right? Well, sort of. What we can see down here is a support box for our wave 4. This is defined by the length of the wave 3 to some extent. And what you can see, these are Fibonacci levels. They're commonly used with Elliott waves. We talk about this in some of our videos if you're interested. On a quick side note, I would be glad if you checked out our website. That is the first link in the description. If you want to become a profitable trader, we offer different tiers where we teach different things, sort of like a trading transformation system where you can learn everything about trading, but we also do a more personalized one-on-one trading transformation. Feel free to check it out. First link in the description, but now let's continue with the analysis. But most importantly, this support box indicates how far this wave 4 can go before we have to look elsewhere, before we have to see, well, if anything else is going to happen, if the scenario is maybe invalid, if the count is wrong, whatever. And what you can see down here is the 0.618 level. That is the golden ratio in Fibonacci, and that is quite deep for a wave 4. And we've actually broken that, not substantially, like we haven't sustained below this. We have bounced right back up. So it is still fine for now. Completely fine, but right now we're basically looking for a turnaround now. If we don't turn around now, we are in for a world of trouble. But what we think is going to happen next and what exact price targets we are watching here and price levels for turnaround, before we get to that, we will look at the data, because this is not very much, it's not very promising to say the least. We're going to look at the data from the 15th of January, so basically from the past 7 days at the time of recording. And what we can see is that prices have basically been moving sideways. Nothing has happened, right? Now, let us look at the open interest, and let me just scale this a bit differently so you can see a bit clearer the open interest. And I will draw the line from the same point as always, the same starting point here. And open interest has increased and is still increasing. Of course, we saw this big spike in here from probably a lot of longs which got flushed and liquidated and corrected sort of, but we can see prices remaining steady, open interest increasing. What does this mean? It means while nothing else is happening, more leveraged positions are entering the market, and that is not necessarily good because that means the market is overheating and we're looking for a flush. Now, depending on what type of leverage positions are entering the market is basically what decides which direction we flush. And for that, we have to look at the funding. Ignore these two. This is just the spot volume, but as you can see, that just underpins the sort of, well, price is not moving. Spot volume is doing absolutely nothing. It's going down even. So no one is basically buying spot. Or in the net sum, no one is buying spot. That is the correct terminology to use in this scenario for this chart. But again, I will draw the same line on the funding chart. As you can see, nothing is happening. Again, we've seen this big spike, as I've said, but they were a lot of longs liquidated, so fine. Funding is the same. So what can we deduce from this? More open interest leverage positions entering the market, but it's not more longs. Longs, the ratio from longs to shorts are the same. But it's also, importantly, it's not more shorts either. So we can't really make a decisive decision from this. It just means there's more leverage in the market. We're looking for a flush, and this is further underlined by our liquidation heat map. So this is the bigger picture. Let me zoom into this 2-week scenario actually, because you can see it well. You can see it much better. This is on coin Ank, the liquidation heat map for Ethereum. What you can see, there is a big liquidity cluster above, there is a big liquidity cluster below. This is basically all of the leverage positions in the well, near the price, and where they will be liquidated. And what we can deduce from this is basically that, let me look at the chart, something like this is not unlikely, that we liquidate upwards and liquidate downwards and then remove or resume. Or it could also be the other way, that we liquidate downwards and then liquidate upwards and then sort of resume in a sideways channel. Anyways, for now, we can remember that there's a lot of liquidity above us, a lot of liquidity below us. It's not decisive. Both sides look like they should be liquidated in order for us to resume market trends in a normal way. What we can see from this data is basically, well, no spot buying, open interest is increasing, but it's not longs or shorts either, it's both combined, meaning that the market is heating up while price is not changing. That is not necessarily good. Now, what do we think is going to happen structurally? Today I don't have my way of words. It's basically what we think is happening, and that is sort of, well, something that should happen for the scenarios to stay alive. Because, as I said, this wave 4 bottomed, and we can't really go much lower in this wave 4. We cannot go here, because then that wave 4 is invalid, and then we have a big problem with Ethereum, because we're probably going to go much deeper. Now, what we think could happen, and this is our primary scenario, but it's not a good scenario as of today. So maybe this will break, maybe this won't work, maybe it will, we won't know. What we are watching for, I'm going to tell you right now. We think a wave 1 has happened. We're currently in a wave 2, A, B, C. And then we will see wave 3, 4, 5. Of course, it's always not financial advice, just our opinion. But what are we watching out for here to confirm whether or not this is happening? Well, you can see we have drawn a support box on the chart, again with the Fibonacci levels for this wave 2. And it basically means that price is going to go somewhere in this box. It doesn't matter where. It can just go here and then go straight out. It can go down here and then go straight out. It doesn't really matter which one of those. It just has to go into the support box and then turn around, preferably a bit lower, preferably like I've drawn it here. And then we're watching for a reversal in wave 3. So basically we're watching for prices to go into this box and then reverse in a wave 3 to the upside. Now, what happens if $3,057 or basically 3K breaks? Well, then this scenario is invalid. If we get a sustained break, that's important. If we just dip below shortly and then go right back up, it doesn't really matter. That can happen, that's fine. But if we get a sustained break below 3,000, then we will have to look at different scenarios. We're probably in a bit more bearish scenario. So what are we doing? Well, we have an order placed between the 0.618 and the 0.786 level. So I will remove this off the chart so you can see the price levels more clearly. Well, not that off the chart. Basically somewhere between 3.15 and 3.05K is where we have a long order waiting, probably with a leverage of 3x, and well, not probably, certainly. And we're going to catch this, and our invalidation is just below $3,000. That's where we would get liquidated if our order gets triggered, and then if we do indeed move lower. Yeah, now you know what to watch out for. If we go below 3,000, then we'll probably have a bit of a worse scenario on our hands. If we go into this box, that's still completely fine, but we're going to watch for a turnaround here. Prices could also already turn around from where we are right now. Keep that in mind. That's always possible. Yeah, I hope you enjoyed this video. If you did, please like and subscribe. Also check out our website if you want to become a profitable trader. And that was it for this video. I will see you in the next one. Bye-bye.